Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Welcome back to Modern Investing Techniques, episode 122. Today is July 30th, 2026. I'm Patrick, broadcasting from Vancouver. Today's markets have some interesting setups. Let's break them down. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Energy holdings could tighten as oil prices rise on geopolitical tensions, while AI names face fresh selling pressure. The S&P 500 closed at 7,316, down 1.5%. The Nasdaq closed at 24,443, down 1.7%. The TSX Composite closed at 35,334, down 1.2%. Investors rotated out of AI-related names while oil advanced on geopolitical factors. Canadian earnings from Loblaw, Bombardier, TC Energy, and Gildan showed solid revenue growth. The portfolio stands at 42 total trades with cumulative profit and loss of $266.87 and matched window alpha versus the Nasdaq of 6.6% across 37 benchmarked trades. Data for year-to-date moves on the Nasdaq and portfolio were not provided in today's numbers. Now we turn to how earnings reactions inside the same theme can point in opposite directions. Microsoft shares jumped 9% after beating on Azure and Copilot growth. Meta fell nearly 9% after missing revenue guidance and reporting a plunge in free cash flow. The repeatable lesson is to isolate the precise driver rather than treating the entire sector as uniform. Start by pulling the earnings transcript and comparing year-over-year segment revenue against consensus. Then check same-day volume against the 20-day average before sizing any position. This approach worked best in 2023 and 2024 when AI CapEx announcements created clear leaders and laggards. The risk is that broader market volatility can override company-specific data within hours. Listeners can replicate the filter by screening for names where segment growth exceeds 20% year over year and free cash flow trends remain positive. The same-day volume check prevents entries when headline rotation swamps the fundamental signal. The AI infrastructure trade arc continues to face rotation pressure, raising the open question of whether CapEx momentum holds or second-order beneficiaries emerge. That same discipline of waiting for confirmed catalysts applies directly to today's practice investment watch. This is a simulated trade for educational purposes only. We are monitoring TRP.TO on the TSX in the energy sector. The strategy is a geopolitical premium entry on confirmed earnings beat and oil price strength. TC Energy reported solid Q2 results, sanctioned $0.7 billion in new growth projects, and raised its 2026 outlook. The stock is trading above its 50-day moving average on the daily chart. Volume has not yet confirmed above the 20-day average. Geopolitical escalation could reverse oil gains quickly, so any entry would carry a stop loss 4% below the fill price. The target would be 3 to 6% on sustained oil strength and project announcements. Confidence sits at medium because the earnings beat and oil catalyst align, but volume confirmation remains pending. This setup demonstrates how to layer a sector-specific macro driver onto a company's fundamental update before committing capital. We require both the earnings catalyst and a confirming price move rather than jumping on news alone. The $0.7 billion in sanctioned projects adds visibility to future cash flows that support the existing dividend. Without volume confirmation above the 20-day average, position size stays at zero until the next session's data arrives. While we wait for that volume confirmation, here is how to keep more of those gains working for you inside a TFSA. Imagine you bought a high-growth Canadian ETF inside your TFSA last month after seeing strong quarterly results. Your order filled cleanly, but the real mechanics matter when you later sell for a 25% gain. That entire profit stays tax-free only if you stayed within contribution room and avoided day trading patterns that CRA could reclassify as business income. The TFSA contribution room resets every January 1st based on the prior year's unused amount plus new annual limits. Over-contributing even by a few thousand triggers a 1% monthly penalty until corrected. U.S. dividend stocks inside the account still face 15% withholding tax that cannot be recovered. Professionals always track adjusted cost base across multiple accounts to avoid accidental over-contributions when transferring assets. The biggest mistake with TFSAs is treating them as simple savings accounts instead of high-growth compounding vehicles. Instead, always run a quick contribution room check in your brokerage app before each new purchase and keep U.S. dividend payers in RRSPs where withholding tax is often recoverable. High-growth assets compound most efficiently inside the TFSA because every dollar of capital gain avoids the 50% inclusion rate that applies in non-registered accounts. A $50,000 position growing at 12% annually for 10 years produces roughly $155,000 in gains. Inside a TFSA, that entire amount remains available for reinvestment without annual tax drag. Contribution room tracking requires logging every deposit against the CRA's annual limit statements, which are issued each spring and reflect the prior calendar year. Over-contribution penalties accrue monthly at 1% of the excess until the amount is withdrawn. Day trading scrutiny arises when frequent round-trip trades appear in the account. Canadian dividend payers such as banks or utilities avoid the 15% U.S. withholding tax that applies to cross-border holdings. Growth-oriented names with minimal or zero dividends sidestep withholding entirely while still delivering tax-free appreciation. The practical model portfolio for a moderate-risk TFSA might allocate 60% to broad Canadian equity ETFs, 25% to U.S. growth names held via CAD-hedged vehicles, and 15% to fixed income ladders that mature inside the account without triggering taxable events. To help you act on these ideas without staring at screens all day, here are 2 tools worth adding to your workflow. The Interactive Brokers TWS scanner filters stocks by earnings surprise percentage, volume versus 20-day average, and sector rotation signals in a single custom scan. Canadian investors can set alerts for TSX names crossing above their 50-day moving average on above-average volume. Access the scanner free inside any Interactive Brokers account with no separate subscription required. The scanner also supports relative volume columns that highlight when today's activity exceeds the trailing average by 150% or more. Wealthsimple trade watchlist alerts allow users to set price and percentage change alerts on Canadian and US stocks directly in the app. This helps busy professionals catch retests of key levels, such as a stock pulling back to its 200-day moving average without constant screen time. Alerts can be configured for both absolute price thresholds and percentage moves from the prior close, and they push notifications to mobile devices even when the app is closed. Before we wrap with the numbers, here are a few quick earnings beats worth watching. Loblaw posted 4.1% revenue growth and 11.9% adjusted diluted net earnings per common share growth in its final quarter before the PC Financial sale closes. Add L.TO to a watch list for potential entry on any pullback below the 50-day moving average. Bombardier reported 6% revenue growth, delivered 32 aircraft, and lifted adjusted EBITDA 9% year over year to $325 million. Consider pairing Bombardier exposure with a broader industrials ETF to manage single-name volatility. Gildan posted a 72.3% net sales jump to $1.58 billion and raised full-year guidance while announcing the sale of Hanes Brands Australia. Review GIL.TO position sizing ahead of the Australia divestiture close to avoid unintended sector concentration. Starbucks raised its full-year outlook after posting its fourth consecutive quarter of positive same-store sales. Add SBUX to a consumer discretionary watch list, but wait for a confirmed close above the recent high before adding exposure. Finally, let's check how the overall simulated portfolio is tracking against the Nasdaq. The portfolio has completed 42 trades with a 55% win rate. Cumulative profit and loss stands at $266.87. Matched window alpha versus the Nasdaq across 37 benchmarked trades is 6.6%. The average return per trade is 0.64% with a current 2-loss streak. Our AI analysis continues to learn from volume confirmation patterns and adjust entry filters accordingly. Open your brokerage app, pull up trp.to, and check whether today's volume exceeds the 20-day average. If it does, note the exact percentage above average and set a price alert 2% above the current close. Before we wrap, watch for volume confirmation on trp.to ahead of tomorrow's open. That's your modern investing techniques for today. Every episode makes you a sharper investor. Subscribe, leave a review, and we'll be back tomorrow with more market intelligence. And if you'd rather watch than listen, find us on YouTube at Nara Network. Links in the show notes. Quick tip from the network. Try Unintended Consequences next. True stories of good intentions that backfired. Every Nara Network show is free at naranetwork.com. The age of AI puts real builders on the phone with an AI host. Apply at naranetwork.com/age-of-AI apply. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't last?